Okay, so hi everyone. My name is Suzanne Grossman. I direct career services at the Marxe School of Public and International Affairs at Baruch College, which is part of the CUNY system in New York City. Thank you for being here with us today for this event, which is part of the NASPAA School System Employer Relations Committee. So we're happy that students and alumni and staff from all over the country could join us here today for this program on the Public Service Loan Forgiveness Program. And I'm going to turn it over to Lisa Bridgewater. Lisa is Associate Director of the Office of Student Financial Services at Indiana University, Purdue University of Indianapolis. She presented for staff at a conference in December, and a lot of us thought it was such useful information about a complicated topic that she has gone through herself personally this process and is a professional in financial aid and did a really great job of explaining it. So we're excited to have Lisa here. I'm going to turn over to you. She has a presentation. You could put questions in the chat. We will save the majority of questions till a little bit later, but whether or not you want to put them early or just hold for a little bit in case your question is answered, that's up to you. So Lisa, I'm going to turn it over to you. Thanks again for being here.
Thank you very much, Suzanne. I'm very happy to be here. When I did the last presentation, I was asked to just kind of give my take, and I had just actually received information about having my loans waived. So I was super excited to share the news, share the gospel. It does work. It does happen. People get their money waived. Some of my excitement from that is lingering still. So you'll see that in the presentation today. Let me go ahead and get the presentation I have for you. I was sent a list of questions prior to this. I think with registration, you were able to send some questions. So I'm hoping to address those. I'm going to go over some basics of the PSLF program, and then I took some screenshots of my personal account so you can kind of see how it worked through and what it looked like. So let me get that started. And as soon as my computer catches up with me, can I get a thumbs up that you guys can see my PowerPoint presentation? Awesome. Okay, and I'll remove the chat. So again, I'm Lisa Bridgewater. I am in the financial aid profession. I've been in it for 16 years. I went through undergrad, I went through grad school, and that's how I was able to be a part of this PSLF program. I'm employed by a 501(c) university. And I'm hoping to give you a little bit of my take on this. Please feel free to leave the questions in the comments, and we'll hit as many as we can before we get out of the session today. Okay, so first and foremost, to qualify, I'm going to use the acronym PSLF. It's Public Service Loan Forgiveness. So you'll see PSLF kind of peppered all through this presentation because it's a lot easier to say, I suppose. But first, talking about how to qualify. First and foremost, you have to be employed for a non-for-profit organization. That could be US federal, state, local, tribal government. It has to be for that non-for-profit organization. You need to be full-time for that agency or organization. And then you also have to have direct loans, have something to waive at the end of the program. Now, to be a part of it as well, the types, you have to make payments. You have to make 120 qualifying payments. So basically 10 years worth of payments. And those payments have to be under an income-based, income-driven repayment plan. Now, a lot of that's kind of crazy. So I'm going to get into it, I promise. So some of the qualifying employers, it could be, like I said before, federal, state, local, tribal government organization, agency, public child or family service agency. The big deal is going to be, it has to be a 501(c)(3). There's situations I know that when people were applying and trying to get qualified at the beginning, there was a lot of confusion about, okay, I work for this particular qualified employer, but I'm actually on contract with this organization to do that. So if your actual paycheck is coming from a private entity, although you're serving in a contract form for that 501(c)(3), that doesn't count. You have to be employed by the actual 501(c)(3), and that's a big big line that they make, and I know that's why a lot of people were confused at the very beginning. Other type employers, like I'd mentioned, a private non-for-profit organization, any of these listed below, or any of these types of services below that this private non-for-profit organization supplies. This could be something that you fall into as well. I know a lot of you here, of course, for public policy, public education, library services. If that entity serves this group of people, then they could qualify as an employer. Okay, so let's get into a little bit of the funky stuff that's been going on. Under Biden, we have the PSLF waivers that have happened. And there's some important things that if you have already graduated, you're already out and you've passed your 6 months of loan grace period, you should be looking into this program right now because there's a deadline. And that deadline will be October 31st of 2022 this year. So the normal requirements, you get credit towards your direct loan. So it has to be a direct loan that you would get, that you would be paying on. Some of the loans that I had before fell under the FELP program. And at that point, this was years ago, it's probably showing my age, but those loans were funded by different banks. Whereas now under direct loans, the Department of Education is the bank. So that's the big difference from the loans in the past and what we're doing now. And that's how they're able to say, well, you need to have a direct loan because that's through the Department of Education now. You're going to be repaying under either the standard plan or an income-driven repayment, like I'd mentioned before. You need to make on-time payments, need to be employed full-time with that qualified employer. Now, when you are asking for the forgiveness part of the loan, that last form that you should be sending saying, hey, I've paid them all, you actually have to be employed at that employer under the normal requirements. And then the teacher loan forgiveness, all of that kind of wraps into, I'm going to just kind of gloss over that for today though. Now here are the big changes. Here's the big shebang for the changes. And this is where I actually was able to get a lot of my loans taken care of. So changes until this October of 2022, you are actually able to receive credit for any of the loans you've paid. So in my case, I had FELP loans, I had some Perkins, I had direct loans. All of those came because I was an undergraduate and then went to a graduate degree and I took loans out through the school. They were either direct, FELP, Perkins, all of those actually are considered under this waiver. Any periods of repayment under any plan count. Under the normal, remember it has to be under income-based. Well, there was a lot of students really confused about how that payment piece worked. So they were either in standard or maybe they're in some other kind of payment plan. They needed to be in a specific one and they weren't. So the government said, okay, look, we understand it was really confusing. We're just going to count it all. And that's why it's on that waiver at this point. Periods of payments where you made late payments or made less than an amount. Remember the normal regulations, you have to make them on time and you have to make the full amount. There's partial payments, late payments, they're able to count because of that waiver. Also, that point of having to be employed when you fill out your form to say, I want the 120 to be considered. Now that waiver is gone. You don't have to be employed in that same employer. You just had to have had those 120 payments at some point in a qualified employer. So they kind of give a little wiggle room, which is why it's really important to understand where you are at this point. So if you're an undergraduate student and you're still getting to the point where you want to graduate or you graduate in May, you still actually have to wait 6 months before you can apply for this to work. So now you're getting past that October date potentially. And I'll get into that a little bit more. Okay, unchanged again, you still have to make those 125 qualifying payments or the equivalent, like I discussed before, the partial payments, the late payments, all of that rolls in, but they have to be able to count 120 payments. Still that 501(c)(3) non-for-profit, that is absolutely key. It has to be, you had to have been employed by a non-for-profit or that provides that qualifying service that is considered a qualified employer. You need to work full-time and you can also work part-time as long as if you do 2 jobs part-time, as long as they still qualify as full-time and they both are qualified employers under 501(c)(3, that still is considered eligible too. Direct loans again or consolidate into direct loans. So what they're trying to say now is if you do have those old FELP loans, the reason they're able to waive that money is because people are being asked to roll that into a consolidated loan under direct loans. So that will be the one caveat if you want to get those that money waived. So if you have FFELP loans out there right now and they've been out there, and maybe you've come back to grad school a little later in life and you still have those, you're going to need to consolidate those to be a part of the other of this waiver before October. Okay, so that was just kind of the nuts and bolts. Hopefully getting into the questions will answer a little bit more of what you guys want to hear. So are loans from years ago eligible for PSLF? No. They start looking at October 1st, 2007, because that's when that program began. And any payments made after 2007, that's what they're looking at, either under the waiver or the regular. They're going only back to 2007 for their loans. Okay. What loans count for PSLF? And I kind of just ran through that earlier. So let's talk a little bit about what these loans really are. So currently, if you are an undergrad or a graduate student, you are considered eligible for direct loan, and it could either be a subsidized or an unsubsidized loan. So those loans count for PSLF. You could also have taken those two loans and consolidated. So maybe you've had loans for the last 4 years as your undergrad, maybe a couple of years undergrad. You can consolidate them to make a one payment as opposed to making multiple payments on all your loans. When you consolidate it, it's considered a direct loan consolidated loan. That, of course, would also fall into the PSLF eligibility. Now, students that are in grad school, you not only have the ability to borrow an unsubsidized direct loan, but you can also apply for that grad plus loan. Basically, it's a credit check. That loan is in your name, but you can get that money up to your cost of attendance. Whereas any direct loans under subsidized or unsubsidized, it depends on how much money or whatever year in school you are, that's how much money you can get. So as freshmen, sophomore, juniors, they have certain amounts they can borrow. Masters, you can get $20,500 in unsubsidized each year up to your aggregate. But all of that can just be consolidated. You'll have one payment. You can take your grad plus loan, you can consolidate that as well. Those are the conversations you're going to want to have when you start looking into repayment, is what's beneficial for me. Should I consolidate? Should I leave them separate? Maybe you only took out a few loans. Maybe you had to switch schools. It's really going to depend on your situation. So I'm saying blanket statements, but make sure you work with the lenders that you already have. Make sure you're looking for other resources just to make sure you understand, if I consolidate, is it the best thing for me, and how to make sure the grad plus loan works the best for you. Now, under the current waiver, again, any old FFELP loans can be consolidated now into a direct loan and be eligible as long as they are consolidated by October 31st of 2022. So what this means, any students that are just making their payments right now, if they take their FFELP loans from the past, if you still have those FFELP loans and you consolidate them and it turns into a one payment consolidated direct loan, now all of the payments you made ahead of time up to that into the FFELP loans and then from here on out will all be counted as a direct loan and counted for your 120. So let me say that again. So you take your FFELP loans, so these are older loans that you might have had, you can consolidate it and turn it into the direct loan. So basically you're just taking the few loans that you might have, making it into one loan, but converting it basically to a direct loan. And then that loan then is considered for PSLF under this waiver. That's where I was actually getting the benefit from, because I did have old FFELP loans that I had to consolidate into direct loans. So it's basically like you're changing the name is really on the surface what it looks like. But really you're just saying, in this, instead of this lender having my loan, this other lender has it. So it's not really this super complicated thing. It's just a matter of who has your loan, who you pay the money to. So that's how that benefited myself. So I was able to count some of my FFELP money and some of the things that I was not doing correctly at the beginning that now was able to benefit me because of this waiver. The one thing I will caution is, if you are looking to consolidate loans and you've already been making payments, so these are folks that have already been out of school making payments, make sure you're paying attention to what type of loans you have before you consolidate, because you don't want to consolidate any of your direct loans if you've already been making payments. Because if you consolidate a direct loan into another direct loan, that's when the clock will start over again. So any of the payments you made on that loan will not count. You'll go back down to zero. So you don't want to do that. That's definitely when you're going to want to maybe a conversation with your lender, maybe talk to your school financial aid officer just to kind of get a second opinion, because you definitely want to make sure you weigh the balance of, okay, I've made so many payments on that direct loan. Do I really want to consolidate and start over? If you've made a couple, that might not make a big difference, but if you've already made a year or two into that, that could make a very big difference. Okay, so let me continue on with questions then. Do you have to have consecutive employment from a qualifying agency, or can you have gaps in employment? Now this is a really great question. Do you have to have consecutive employment? No, you don't. They basically are looking for the 120 payments that you made. So you can technically work for a few years in the 501c3 realm. You can go work for a private employer, come back a few years later, maybe you're back into a qualified employer at that point. At that point, they'll start counting your payments again, but you don't lose the payments you made earlier with that first career. So as long as you're making your payments, you're making them on time, they're going to count towards your 120. When you switch jobs, that clock will stop. And if you come back into 501(c) realm, it'll start again right from where you left off and it'll start accruing payments at that point. Let's see. Yeah, I think I hit that one. All right, so now what counts as a payment? So under the regular, the qualifying monthly payment is basically anything you've made after 2007 when the program started. It's under the qualifying repayment plan. So it's an income-based payment plan that you've been on. It has to be for the full amount, whatever it says that you need to be paying for that. You can't be partial payments. But if you do partial payments, as long as it adds up to that total on your bill in that actual month and it's not late, then that's okay. But if you pay like half of it and like 20 days later pay the other half of it, you have lost that eligibility for that payment because you're late at that point. Now, under the waiver, they are counting all of those. They're counting the partial payments, they're counting the late payments, they're counting overage, under, all of them. They're taking everything, but it's only going to be good till October 2022. And again, that's how I was able to qualify and get so much money waived. Let's see if there's anything else I need to tell you about that. Yeah, there were some times where I was on the wrong income-based repayment plan and they actually counted those. And I went through, and I won't bore you with the details, but I actually went through and looked at all the loans and all the payments. And not only did they credit money, or not only did they take care of a big chunk of my loan debt, but I actually got a refund. And I thought, well, why did I even get a refund? Well, that refund was extra money that I had paid past that 120 on those particular loans. So they just gave it back to me. And timing for that couldn't have been better because it was actually at Thanksgiving, right at the like Black Friday and, and for the holidays. It was perfect. Okay, so, and you can tell I'm still excited about all this money being waived. Let's go into how a new graduate starts a process. So I mentioned this a little bit before. Students automatically have the 6-month grace period once you walk out of school. So you graduate in May, for example, so that's June, July, August, September, October, November. So you don't have to make your first payment until after those 6 months on your direct loans. For the PSLF, you have to wait through that 6-month period before they will start counting your 120 payments. So you have 6 months, gotta wait. Once that 6-month hits and you're able to start making payments, as long as you're in a qualified employer and you're making your payments on time, they start counting. And this is the point where you're going to want to fill out the certification application form. The form really is just you turning in something to your lender saying, hey, I want you to consider me for PSLF. I work for a qualified employer, but I just want you to have that information on record. So even if you start working for the employer and you're on income-based repayment and you're making your payments, even if that form isn't in, you still are going to be counted for that time period. It's just you won't know how much is counted until that first form comes in. And then like you file your taxes, like you did your FAFSA, every year I would recommend doing that certification and application form, because then every time you turn in that form, they have to go back and look at everything that's happened for the last 12, 13 months, whatever, and give you that update of how many payments are actually counting. So you'll always know year to year where you stand. They won't know to count it. They won't know to look at your employer. They won't know any of that without that form. and then you'll just want to turn that form in every year. What I typically do is I'll file my taxes, and then I'll make sure I go out and do my income-based repayment stuff on studentaid.gov. That's where you have to go and tell them, like, here's my tax information, tell me what my income-based payment plan will be. That's established, and then I turn in my certification form. So every year it's like clockwork. I just take care of that every year, and I know year to year where my loan is. I did this process earlier in 2021. And of course I had my payment plan, I had everything set up, and then the waiver came through, and then I got all this money waived. So it was a very, it was a great blessing and surprise when it happened, but it was awesome. Okay. How long do you have to work in public service? Again, I mentioned before, it has to be 10 years making that 120 qualifying monthly payments, 10 years, 12 months in a year. It's 10 years. And again, you can have gaps in enrollment. The clock will just stop counting on your payment plan. So if you worked 5 years and you left, those 5 years of making those eligible payments will count. And then if you get back into the 501c3, they'll start clicking at, or still start counting after that 5 years. They'll just add to it. I think one of my other questions I had is, what happens if you don't make 120 payments? Can they do partial? Absolutely not. You have to do 10 years, 120 payments before they'll even look to waive anything. So there's no partial. If I only work 5 years, will they help me with a partial part of that? That doesn't exist. It has to be 10 years, 125 payments. Is there a minimum loan amount required to be eligible for PSLF? There's not, but remember, you're making 120 payments and they're qualifying payments under income-based repayment. So if after you make those 120 payments, if there's money left over, then yes, it's going to get waived by PSLF. But if you've made those 120 payments and there's nothing left, then there's nothing to waive. They're not going to go back and retro anything. You have to make 120 payments regardless of the amount of money you owe. After that point, if there is anything left, they'll take care of whatever's left. So if you have a very small loan, a couple $1,000s, and you've already, after 120 payments, you would have well paid that off, then you will not qualify for PSLF. So it has to be a certain amount in order for you to make payments on for 120 payments. That amount would be different for everyone because it's based on your payment that you can make, and that just comes down to how much you make per month. So it's going to be individual for every student. All right. So which payment plan qualifies? And this is where I think a lot of confusion comes in. What I've noticed, what I've been able to see is, as I've gone through this process, they've really walked me through and showed me, okay, look, this is your payment plan if you're doing this. I was with my Fed loan servicing. Those are the guys that have been taking care of the PSLF students and payers for the since 2007, basically. So they've really done a lot better with getting people in the correct plan. It comes down to, it has to be based on your monthly payment of your income. That's the income-based repayment. So if you make less, your income-based repayment might very well be zero. They might say you just have to pay zero because you're just getting out of school, you might have a lower paying job, and as you're doing this and you qualify for, or if you show them, you know, this is how much I make, they review you for some type of income-based repayment, you could very well qualify for zero, and that would be your monthly payment. That's good to know when you're first getting out into the world looking for jobs. I know a lot of 501c3s, they're not exactly the highest paying jobs, which is why this program was developed. They want us to go and be in the public sector and help with these services and types of organizations, but they want to give us the incentive to say, you've taken out all these loans, let me help you pay back because you are in the public service industry. So they are really good with working with you. The 4 plans I have up here: revised pay as you earn, income-based repayment, income contingent, all of that. The baseline is, it's going to look at how much you earn and then determine what's going to be the best for your payment, how much you can make, or how much you make and what should your payment be. Your grad plus loans can also be a part of this, which is great because your grad plus loans could be a higher amount. And I have a feeling that's what a lot of students are doing. They're taking that grad plus money out because you can take a little bit more as a grad student. But still, if if you're still needing to find that lower income job when you first come out of school, be it undergrad or grad, your payment could be very low because of the income-based payment. So they're not trying to make you do something that's going to harm you. They're trying to find a way for you to balance making that payment as well as being able to pay for your house and live and transportation and things like that. So this is a good way to go. And again, once you are filling out this application, they will kind of walk you through which payment plan will be the best for you. They're going to need your taxes though, so make sure you have those available. Now, all of the things that I've said, you can go to studentaid.gov, and if you just type in PSLF, there's pages and pages and pages of questions and answers. These different types of scenarios, even scenarios that I won't touch on today, but that's also where you're going to go to fill out this form. And they've created this help tool on this website. So basically you log in. So that's going to be your first barrier. You have to get through the login process. Get into the studentaid.gov and you'll be able to see all the loans, everything you've ever borrowed. It's all going to be right there for you. Once you get into the PSLF part of it, it literally walks you step by step on how to fill out that form. It asks for your name, it asks for your employer at the time. And by the time you're done with the tool, you have a form that you can print out and give to your employer that walks them through again what they have to fill out. That piece will more or less come back to you, and then you upload it back through the PSLF website through the studentaid.gov, and then that's where the process begins. So there's a tool out there now, and they've recently developed this. This wasn't around when I first started back in the late 2000s. So this is something that they've made because they know they've created some barriers for students and people that are trying to pay their loans. They're trying to help us out. And this is a really good process now. It's a lot better. So tips for making the most out of this. Obviously, you want the Department of Education to pay as much as possible, right? That's always the goal. If I don't have to pay, that's great. It's loans. If they want to pay, that's awesome. So you don't want to make larger payments that are necessary, because if you make more than the amount that they're telling you you're required, that doesn't get you any benefit other than getting you closer to finishing to pay your loan. But if you know you're going to have money left over after those 125 payments, you don't want to make it go faster then, if that makes sense, because you're going to want them to have money to waive versus you paying into it now. So if you're making double, triple payments, of course, it's going to take you less time, possibly less interest, but also know that these loans have really low interest to start with. So that might be something where you're just going to want to make those 120 payments the actual amount they tell me I need to pay, so that you can take full advantage of them taking care of a big chunk of your loans. Definitely don't make more than one payment per month. That kind of goes into the larger payments. You don't want to make double, triple payments in the month. As soon as you are graduating, as soon as you're ready to start making loan payments, you're going to want to get on an income-driven repayment plan right away. So you know you are set up from the very get-go. So as soon as you're getting out, you're going to want to pay attention to your studentloans.gov account. You can see all the loans. You can see who your lenders are. Work with your financial aid officers back at your school. See how they can help you figure out what loans you have. There's also a website, NSLDS, which is the National Database for Student Loan Borrowing. Basically, you can log in there and see all of the loans that you've ever had, and you can see which lenders are with who and start making those calls, having those conversations about what direction to go. If you do want to consolidate your loans, I would say look at that process as soon as you graduate. So if you want to consolidate, I would say start right away if you're going to do it, because the longer you wait to try to consolidate your loans, you're making unnecessary payments then with higher interest rates that might be better if you were to consolidate. Now, that doesn't happen for everyone. That's why it's really important that as you're graduating, look into these scenarios for you specifically, because one student and another student is not going to be the same. So if you're talking to your classmates and things like that, they might tell you, yeah, this worked. Make sure you're looking for your specific scenario, talking with your financial aid officer, asking questions even before you graduate. What's going to be the best benefit for me? Should I consolidate right away? And then the other tip I would say is make sure you're maintaining your IRS W-2s from any place of employment that you feel like should be qualified for this program, and anything else that you can keep on hand that shows that you were full-time. That's just in case your employer closes, maybe the servicers are having problems confirming something. That just gives you the extra edge to say, hey, I already have this documentation here. You know, this should help get you to where you need to be to say that I'm approved for this program. Okay, so now I'm going to get into what my account looks like. Right now, there's 2 different servicers for students that have PSLF. I started with my Fed loan. It's Fed loan servicing. So if I were to go out and make payments for my loans, they're with my Fed loan. So this is the website I would have to go to. If you're applying right now, you're actually going to be set up with a new servicer, Mohila, and I'll show you a little bit about that website. So where do my loans live, basically, is what I'm saying about this. My loans currently live with Fed loan servicing. So I have to go to their website. I can see all of the information about my loan, how much I owe, what was waived, how many payments are in the pipeline. All of that is on Fed loan servicing. But as of December 2022, that contract is going to end with them, and they're all going to be with Mohila. So I just put a quick screenshot of what Mohila's website looks like. So as you're applying, as you're graduating, as you're paying these loans back, Mohila is going to be the group that's going to come after you for the PSLF program. Now you could have loans with Navient, with Mohila, with Ed Financial, with a number of different servicers. You're going to want to get them all moved to Mohila. And in order to do that, you fill out that PSLF form. They grab all of your loans from all of your lenders and you get centralized to Mohila. So then you won't ever have to chase those loans again. They'll all be with one servicer. Now, if you've been with the same school, same program, done the same thing, there's a good chance you probably just have the one servicer. But if you switch undergrad to grad, even 2 different schools, or maybe something happened to the school year where they've just changed how their servicer is going to be, you could have multiple servicers. So that's something to get a hold of, get your hands around before you graduate and before you start contacting folks. You need to know where your loans live. This is where my loans live. Your loans will live eventually in Mohila, and so will mine. So my example that I'm going to show you, I have jumped around a little bit. I know there were some questions about jumping around in and out of the field. I've also put in a little bit of a scenario of what happened to me. So I first went to a private college as an undergrad, and we know that's where my loans came from, was the private college. Right after I graduated, I went to grad school. I graduated before PSLF came to be. So I was already making payments before 2007, just how I was supposed to be making payments, not to be in default, you just make your payments. Technically, my 120 payment should have been covered in 2017. However, at one point I was on the wrong payment plan, and that was for a number of years. I also stopped and went back to school after I finished my grad degree for a certificate. So I stopped, I was in school deferment, which means, you're back in school at least 6 times for half time. So you don't have to make payments on your loan. Well, when that happened, I didn't make payments. So then of course my clock stopped with the 120 payments. But under the temporary waiver, they were able to look at all the things that I made under the incorrect payment plan. They found all my 120 payments from the different time periods of undergrad and grad and switching servicers and this and that. And they were able to waive $33,943.12. That was what so far. Now I have some other things in the pipeline, and I'll show you now too. So here's my personal screens. So when I log into my Fed loan, this is what I would see when I first log in. And I don't know if you can see, but I've made my last payment on March 6, 2020. That was pretty much the last month they were taking payments from students. And that's, the government basically said, no more, we're not taking any payments for anything. Well, what's been great during this period is if you are a part of PSLF right now, the time where the government said we're not taking payments right now, those payments actually counted towards the 120 credits or 120 payments. So the 2 years that we haven't had to make payments on, that positively affects me because I haven't had to pay a dollar, and they're still going to count that each month as a month payment towards that 120. So the people that are in this scenario right now too, they're really going to get a lot of relief from their loans. My loan was close to 50,000. I logged in one day after they had made the decision of how much they were taking, and then my loan right now is 15,144.90, and that's pretty much the latter part of my grad degree. All of my undergrad loans were taken care of. Now, when you're in your portal, once you're looking at how this all shakes out, the lender actually has a spot where you can check your progress. And you can see there's an upload to certify. So when I get the form back from my employer, I'm just going to upload it right there, and then they're going to take care of it and recertify everything and give me new numbers. So this is the only place I really have to interact with this and studentloans.gov. So if I were to click in to see specifics on my payments and my payment counts, right now I have 3 loans left. I have a unsub-Stafford, the second one is a sub-Stafford, and then there's a third unsub-Stafford. So there's 3 different loans out there. And you can see based on if I qualify for the regular PSLF, or there's also that temporary extended PSLF. And the main difference with that is they're pretty much looking at the same thing. It was just for people, it was right in the very beginning, they were having a lot of problems with students. I think they were saying less or just around 1% of the students that were applying for this were getting approved. That's 99% not being approved. So they had to do something because obviously there was something wrong with the program. So they put up some additional like extended relief for people. So right now, as I stand, I've already made 74 payments in PSLF, but if I look under the temporary waiver that they also have, I could actually be making 86. That's actually going to come through as 86 once I get all my, once I do this last, I'm getting ready to turn in my form for this year to get it certified, and that will all catch up and it'll all be 86 payments made towards. And it just keeps counting towards this time that we're in the time where we're not making payments for loans. Now I can dig a little deeper and show the payment summary just so you can see like how this shakes out. So right now, that very first box, my eligible payments under PSLF 85, qualifying 74, I need employment certification for those 11. That's the one I'm turning in. Remember I said I turn it in every year. So about every 12th month, that's when I start getting my numbers updated again. So that's why my form is due, so to speak. I've put that due date on myself. But you can see how they're looking at specific loans. And if you have multiple loans, you'll be able to see all the payments. So this is a good tool to do to take care of before you start consolidating those direct loans, because it'll tell you right away if you qualified making payments for them or not. A couple other screens I was going to show you. This is just the loan details, and you can see right there lines 4 and 5. There are special consolidation loans paid in full. That's what they were able to basically pay off for me. That was consolidated loans from my FELP program. So that's why they were considered special, I guess. But it was a consolidated loan for my FELP loans. So that's why you see no FELP. It's all direct loans that were here. And those 2 were paid in full. And then just, for me, I had to go and dig and actually see the payment taken off. So this is the ledger in my account. And you can see the write-off was $33,943.12. So I'm so really cheesy about that, because I finally feel like I can say, it works. It really works. It's right there in black and white. It helped me and it's helped a number of people I know. It's great. All right, so that was my presentation for you all. I'd be happy to answer any questions you have. Again, I'm super excited to talk about this. I hope I'm giving you information that's going to help you, but I'm ready for questions.
All right. Yeah. Thanks so much, Lisa. There were a variety of questions, and I'm going to go back to the very first ones, and maybe we can just cruise through them. And I feel like there'll probably be more coming. Let's see. This is saying, what is full-time defined as in terms of hours per week? What if I work for a jurisdiction that has me under a term limited temporary status, but work full-time hours?
The full-time hours, I want to say, are 30. I'm actually looking up right now, but it's only 30 hours. It's not the traditional 40. So it's if you meet your employer's definition of full-time or work at least 30. So if your employer comes out and says directly, no, full-time here is 40, it has to be 40, but it's how the employer defines it, or 30 hours, whichever is actually less.
Okay. If I'm paying to Navient, is that a direct loan?
If you've recently taken out that loan and you're paying to Navient, it's a good chance that it's probably a direct loan. We've been with direct loans for over 10 years now. So if you're just borrowing loans in this last 10-year period, it's going to be a direct loan. Navient is not going to be the servicer that handles the PSLF. So when you go through this process, they'll grab that loan at Navient and put it with Mohila. But yes, that's probably a direct loan at Navient. Now, Navient, just FYI, Navient's changing their name. I have a feeling they're working on rebranding potentially. So they're going to be called AidVantage, AID Vantage. So be on the lookout for that too.
I have my own question. That the Mohila provider is not the current. Can you go straight to that one, or do you go to the one that's like you have that's going to transfer to Mohila?
Right. I'm with Fed Loans. If you were to start that process right now and get certified, you're going to Mohila. It's going directly to Mohila then. Yeah.
Great. There were a couple of people who asked this question. Do current students qualify? I'm not sure. Maybe you know what they mean with that question.
Sure. So, students right now as seniors, say, are graduating masters, if they're currently in the program right now trying to get their degree, they're not qualifying. You have to be out of school and out of your grace period to be considered for this program. So you have to be done with school. Once you come back to school, you automatically go to in-school deferment and they pull you out of that. So you have to be out of school to do this.
Okay. Can you provide some examples of a direct loan for clarification? And I don't know if that was later answered because this was a little earlier.
Sure. So we kind of talked about that a little bit. Direct loans, basically that's saying the Department of Education is providing the money, the lending, they're the bank. You can get a direct subsidized loans, direct unsubsidized loan, and that's going to be dependent on your need. As a graduate student, you are only eligible for the unsubsidized piece, but then you can apply for Grad Plus, and all of that are direct loans. So there's basically getting these different types of loans based on what type of student you are, but it all comes from the same bank, the same lender, which is Department of Education.
Do we need to be paying during COVID? You answered that. Now, is that still happening, the COVID waiver?
Correct. As long as they're telling us they're not expecting anyone to pay back their loans, we don't have to pay anything. And I encourage you not to, because they're counting those payments towards your 120 if you're in the program already.
Yeah, that's amazing. I didn't quite connect all those things.
Mm-hmm.
The 6-month grace period, is that for grad students as well?
Yes, it is.
Okay. Is there a salary cap on eligibility?
There's not a salary cap, but remember, you have to be in an income-based repayment plan. So it might not make the best sense if you are in a real high-paying job to be paying income-based, because the standard payment might actually be less, because they're going to look at how much you can pay toward your loan, and your standard just, in 10 years, this is how much I need to pay versus my income-based, it could be a little higher. So that's going to be individual. You got to pay attention to that piece of it, because it might not make a benefit to you if your salary is that high.
Do you have to let your lender know every time you'd be no longer paying into it? Like if you switched into the private sector for a few months and switch back, do you need to update this yourself?
You do not. You just, as long as you're continuing to make your normal payments, they don't necessarily care if you're qualified for PSLF or not, as long as you're making your normal payments. And then as you certify, there's just going to be a time period that's not going to be counted. So it'll be, if you're in for 5 years, you walk away for 3 and come back, and then you're in it for another 5. Those 3, you're still going to have to be making just normal payments, so you're not in default. But they'll go back and look at your first 5 and that last 5 that were qualified and see what you paid under those 2 time periods of your life.
If you make an equivalent of 120 payments before 10 years, can it still be waived? So I think there was another question on this, like you were saying like it has to be monthly payments, right?
Monthly payments. So if you're making 10 years worth of payments, 120 payments, and you have nothing left at that point, then there's nothing for them to waive. So it doesn't necessarily benefit if someone has a very low loan or really high income.
And you were saying before, like you shouldn't be making 2 payments in a month under this program if you want to take advantage of it.
Correct. You don't want to pay ahead. You don't want to pay more than you need to. You just pay exactly what you have to keep up on the best benefits. Because if you start paying faster, you get through it faster, and then there's nothing for them to waive.
Yeah, which I think is another question. If we need to make every payment in full, what is there to forgive at the end? So that goes back to that. If your loans are smaller, then you may not be able to take advantage, right?
Exactly. Yeah. If you only have a couple thousand or your income is extremely high, maybe not so much of a benefit to you. But again, remember this program is looking for people going into the public sector, 501(c)(3)s, and traditionally that is not a high paying field across the board. There are some high paying fields, of course, in it, but not across the board, especially right when you first get out of school.
What are the conditions to figure which income-driven repayment plan, repay, pay, IBR, ICR, is advantageous for the program?
That's going to come down to your income. So when you submit your tax return and they look into all of the things as far as what your AGI is, what your income was, and they'll come up with the best way based on how much you make. So it really comes down to what's on your what you made, your AGI. So if you have a lower AGI versus maybe your friend has a higher AGI, your plans could be completely different. They're going to look at what's going to be the best benefit. So if you're making more, maybe there's a way where they change the interest rate or stretch it out to say, okay, this money over 15 years or this money over 30 years, or it just really depends on that income. That's what it's going to come down to, is how much you are making when you're doing these forms.
What happens if you start qualifying payments, then go back to grad school and take additional loans? Do the earlier payments count? Can you re-enroll under the waiver, even if still in grad school, so long as you are working for a qualifying entity?
Yeah, timing is gonna be key. Once we pass October 2022, there's no more waiver unless they come back and do something different. So if you're going back to grad school, everything that you did prior to, as long as you weren't in school, as long as you're a qualified employer, making qualified payments and a qualified payment, they're gonna hold on to that and say, yeah, great, he's made this amount or he's already paid this amount already. And then they can go back to school, deferment fine, and then once they come back out, they just pick up where that count left off and start again. But nothing while you're in school is counted. So if you're going back to school at this point, that waiver is going to be long gone. So it could be something different at that point, but it'll just basically, you're going to want to get back in a 501(c)(3) employer, qualified payment, qualified plan, and they're just going to be a little bit more strict at that point.
Did Fed Loan transfer everyone's history to the new company?
They're in process. They have not yet. I'm still with my Fed Loan. They started last October of 2021, transferring people over. They're doing it in waves. I haven't hit that wave yet, but it will be done before December.
Okay. I don't know if this is the same question. Can we qualify for the waiver for a current grad student that made, I think my service prior, so they are not a certified PSL. Okay, I think we did that. Yep. Just to clarify, between now and October 21st, 2022, you can qualify regardless of which repayment plan you are in or have been in over the course of those 120 payments. Yes?
Yes, that's exactly right. That waiver came in and saved the day for a lot of people, because basically all of this, the strict, you have to, you must, they basically said, okay, until we're going to do this waiver because we know we made it difficult. So if you made those 120 payments, partial payments, late payments, wrong payment plan, all of that is covered under this waiver and will count towards that 120 now.
Nice. Who do we talk to arrange IBR, DOE or our loan servicer?
Definitely your loan servicer. So you're going to want to find out who has your loan. Is it Mohila? Is it Ed Financial? Is it Navient? You're going to go directly to them. If you want someone to like bounce ideas off of, you can work with your financial aid officer. They should be able to give you some guidance, but your servicer, Navient, things like that, those groups of people are the ones that you're going to want to talk to about your Department of Education loans, your income-based repayment. That's who you want to go to.
Is income-based repayment plan based off you and your married spouse's income?
Yes, it is. So that's something else to consider. If you're married and both of you are making a substantial amount of money, you're not going to be in the best situation for this program, because it does look at married spouses. They look at the AGI. If you're joint or separate filing, if you're married, it's going to look at your spouse's income too.
Would you recommend consolidating loans at the end of a master's program if you haven't made any payments yet? Are there any drawbacks to consolidating if no payments have been made?
I don't see any drawbacks necessarily. So basically what they do when you're graduating, undergrad or grad, they look at all of your loans, and depending on when you've taken out these loans, you've had different interest rates throughout the years. What they do then is take all those loans, average that interest rate, give you one interest rate, one payment for all of the whatever loans you might have taken. This could be a good thing or a bad thing, depending on what that interest rate falls out to. Now, luckily, last 5-7 years, interest rates have been extremely low, so it shouldn't make a ton of difference. They haven't jumped from year to year either, so your average is going to be probably pretty close to what your interest rate would be anyway. If you're looking looking into FELP, looking into older loans, that's going to be a different conversation. But I would definitely look to see if that's going to benefit you. It benefited me greatly because then you only have one payment versus, your undergrad, your grad, you have a couple different servicers. You get all one servicer, one loan, one payment, and it's a lot easier to manage. But again, you got to pay attention to those interest rates. You don't want to consolidate and your interest rate goes higher because of 1 or 2 years worth of interest rates that were weird, if that makes sense. I hope that makes sense.
Yeah. Are 501c4s eligible too?
No.
Okay.
501c3, that's it.
Let's see. There's someone wondering, how did you get on the wrong payment plan?
So I know, right? Pretty easy actually, because I basically was just paying attention to the stuff in the mail, wasn't really paying attention to, I have to do this or this would benefit me. And I just saw I had to make payments and started making them. I had to be my own advocate and look to see, okay, why am I making, 4 different payments for these loans, and now I'm having more. There's got to be a better way. So I became an advocate for myself, and that's when I found out that income-based repayment was a lot better. I wasn't quite in the financial aid realm when I first started making loan payments, but as soon as I hit financial aid, I was like, why didn't anyone tell me this? So it's definitely something that was hidden, and it's unfortunate that it's like that. So you have to be your own best advocate, ask questions, talk with your colleagues, attend these seminars, do your own research, but that's how you're going to know that you're doing the right thing, is because you have the resources available to you now. They've gotten a lot better. But yeah, that's how I ended up. I just wasn't paying attention to what was coming in the mail.
What if I can't get in touch with a previous employer to sign my application?
That is going to be a little trickier, and that's going to be a little bit of an appeal situation. I know that they dig a little deeper when you can't get the actual certification. So that's when you're definitely going to want to have your W-2s, any proof that shows that you are full-time, certain time periods. That would probably help your case, but that then becomes case by case because they need someone to be able to verify. But if you have enough documentation to show, that might be enough to verify. Because some employers are gone, closed, don't exist anymore. So I know students or people are going to have that issue too. So that's why I say make sure you keep all the documentation you can to prove that you are full-time, your W-2, your tax returns, any pay stubs, anything that shows that you are full-time.
Somebody was asking about the recording. I will send it to everybody because I know you may need to go and watch this all over again. So yes, everyone will get the recording. Is there any program available for signature student loans?
Unfortunately not. The signature student loans are considered private loans. Any private loans are kind of on their own. You definitely want to pay attention to how the interest rates shake out on that, because those aren't necessarily fixed. But yeah, they're kind of on their own. Make sure you're paying attention to who has that loan. Make sure you're making any kind of payments. They do have like payment, what do you call those, incentives, where they like knock off a little bit here or there if you do direct withdrawal versus writing a check. There's little bits and pieces of that. There's also times where you can get your cosigner taken off if you made a certain amount of payments. So there are some things for private loans, but not as awesome as the PSLF.
Is there anyone, a human, to talk to at PSLF that can be helpful?
Yeah, it's a little scary, isn't it? I would say, the servicers are becoming a lot more savvy. I know you guys have probably seen in the news, Navient was kind of in trouble there for a second. They're a lot better. So you can always call your servicer. They should be able to tell you the same information I'm giving you, or at least a milder version, perhaps. Talk with your financial aid officer, talk with studentaid.gov. That's where we send everyone, undergrad, grad. That's going to be your best source. And then there are phone numbers that you can call once you get to that website and chat with them. They've been pretty good with help with that. So I would say take that route. Start with your servicer though. That's going to be your best.
Someone asked, does 30-year payments consolidated FELP qualify?
Yep.
Oh, okay. Yep. We answered the question about 6 months after graduation. you say more about the right payment plans? I think we talked about that. How can we confirm? Yeah, how do you confirm that you're on the right plan, like what your plan is and you're on the right one?
So when you're with your servicer, they're gonna they'll give, trying to think how you start. When you go into to make your portal and make your payment, if it's Navient, Ed Financial, whoever your servicer is, it's going to show you all your loans, and then it's going to give you all of these options to look into payment plans. It could be anywhere from just standard, make a payment for the next 10 years or out to 30 years. You can go through, and in your portal, it should show you, they should be able to send you a letter about your type of payment plan. If you are never asked about your tax returns, that's probably a big flag, because they need your tax returns to make that decision. So I would definitely look at your servicer, look in the portal, look to see, apply, or when you go into to make those payments, you can actually ask them to re-review based on your income. And that's when you'll provide your tax return, and that's how you'll know you at least started the process. But your provider should be able to show you on your portal, send you a letter, that they should be notifying you what plan you're on.
And just to clarify, because you said there's this waiver in place until October, does that mean you have until October to get onto the right plan?
Basically, yeah, because they were looking at FFELP loans right now, and they normally wouldn't have. They're looking at all the crazy like non-full payments and things. So they're looking at it all, but once that deadline hits, they're going back to, you have to be qualified.
Can you make a payment while in school and make those months eligible too, for someone currently in grad school after many years, but already have several eligible months and don't want to lose out if I don't have to?
Right. It comes down to, you have to be working for a qualified employer, making payments at that point. Making payments during school does not count.
But what if, like, we have a lot of students working full-time and going to school?
That gets a little tricky, because you're going to have to force your loans out of deferment. They'll go into deferment because you're a student. And then you'll want to work with your servicer to make sure that they know that you want to pay while you're employed, and do it that way.
So it might be possible.
It might be possible, yeah.
Do nonprofit hospitals or the VA count for physicians to be eligible for the PSLF?
There are some hospitals or some of the VA stuff that I won't say specifically, because that's where we start getting hairy. That's when you're going to want to go dig a little deeper in your scenario and find out if that specific will work. I know universities work perfectly. There are some hospitals, because there are 501c3 non-for-profit. That's what they're looking at. So if it's any kind of for-profit anywhere, it's not going to qualify.
I can't remember if you answered this. Who do we talk to consolidate loans, DOE or our servicer?
Definitely your servicer.
Okay.
Your servicer that has your loans. Now, you say DOE or servicers, they're actually one and the same. So Department of Education is the bank. They enlisted these 9 different servicers to give us money. You just might have one depending on what school you went to, what part of the nation you're in, whatever. They're all equally the same for the most part, but they're the ones you're going to want to talk to.
Is it possible to certify past employment while you were making eligible payments, even if you were not in the PSLF program at the time?
Yes. If you, right now, if you're not in that qualified employer, but you were a year ago, they're taking it. And it's because of that waiver. So you can fill out the form now, get past things qualified only up to 2007, because that's when the program started. So if you had any of that eligibility between now and back to 2007, you can do past certifications. None will be accepted though after the October 2022. So make sure you're doing that now.
Okay. Are undergrad and grad loans a part of the same certification application and 120 payments, or does it need to be 2 separate applications for each?
One application for all of them. That all of them fall under just the one form, and when you fill that one form out, all of them come together with the same servicer, and that's when you'll all get them all switched to Mohila.
Someone asked again about the 6-month period, so I think you answered that. You have to wait the 6 months.
Have to wait. Yep. The only weird part is going to be if you're actually full-time in a qualified and going to school. That's going to be the weird time, because you should be able to qualify, but you have to do some things on your own to get out of the deferment, because they automatically put you in school deferment, and then it knocks you out of qualification. So you'll have to go to your servicer and say, hey, I'm actually making payments, I'm working.
Okay. I will do a few more. I know we're at 2 o'clock. Do you have a couple?
No, you're fine. Yeah.
All right, we'll just keep trying to plow through. So if you're in the private sector for a while, can you shift to a standard payment schedule, go back to an income payment schedule when you return to a qualifying employer?
Yes, you can. Yes, you absolutely can. You can go to standard at any point when you're in the private industry, and then once you come back, you can switch those plans at any point. It's just a matter of when you're employed. And what I would say is once you get back into that world, go ahead and start that process again, get that certification form. Of course, they're going to be able to say you just started, but at least it puts you back in that program and that they're counting more so you can see it for yourself too.
Okay. Then I think the rest were all thanking you for being here. So I think we caught everybody. And I know there's a lot of people who RSVP'd, and I don't know if you want to put, yeah, how do you feel about making yourself available? I don't want you to get a flood of 200 emails about this. What are your
That's fine. You know, honestly, this is the first big group that I did. So let's go ahead. I'll give my email out and we'll see how it goes. Do you want me to just put it in chat or do you want to put it out there?
Yeah, if you want to put it in the chat, that would be great.
Okay. It's actually my maiden name, L Woody at IUPUI.edu, but I'm Lisa Bridgewater now, though. They just didn't change the pre part of that, but it is L Woody at IUPUI.edu. Again, I'm Associate Director in Financial Aid, so I can give you my best advice. I'm definitely not the person in charge of PSLF, but I have definitely been around the world with it.
Thank you so much, Lisa. So much information. We appreciate making yourself available afterward. For everyone here, I know we lost some people, but thanks for hanging on, everybody. Really, really valuable. Yeah, please join me in thanking Lisa for this valuable information. We hope everyone will go forward and take advantage of this program. It's complicated, but as Lisa's showing us, it's not impossible, very doable. And thanks, everyone. Thanks, Lisa. Have a great rest of your day. Take care.
Thank you.